Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. If you don't know this, I actually have written two amazing investing in real estate books. This is the original One Rental at a Time. It's basically a journey from losing $150,000 in the stock market to ultimately earning financial freedom and replacing two six-figure incomes. The journey starts in 2001, before the last housing run-up. We talk about how we survived and thrived at the top, took advantage of the downturn, and ultimately retired early. So that's this book. That's basically a story of buy and hold. This is something was a passion project of mine. I went out and collected 15 stories of other real estate investors who had different stories than Olivia and I. Both of them you can find in the links below. Both of them are on Amazon. The original book is on Audible, with the second one hopefully coming shortly. As we look at the daily financial news for April 29th, Friday, April 29th, lots of stuff going on. Lots of stuff we've talked about. The trend of kind of calling things early continues. Where do we want to start? Let's start with some earnings. We had lots of earnings in the last 24 hours. The big one, actually, there were two. Amazon. We talked about Amazon a couple of times, once over last weekend, once I think yesterday, talking about, hey, if the Rivian write-down hurt, was it General Motors? It's got to hurt Amazon. It hurt Amazon to the tune of $7.6 billion loss. That was a shot that was very predictable. And I got a note from some of you that you actually took out. One of you said you took out some shorts, a short position on Amazon, and a couple of you took out puts. So you took that negative information and placed your bets. It worked out. Congratulations. I'm happy for you. But none of this is financial advice, folks. This is all just what I'm seeing in the day-to-day as I make financial decisions on my own. I think what really got Amazon wasn't the Rivian write-down. It was slowing revenue and a pretty weak forecast. Again, we called it. We've talked about revenge spending turning from stuff to experiences, trips, travel, airplane rides, things of that nature. I think it makes sense. I think this will be the last hurrah. I think this summer will be the last blowout party, if you will, because we have to have a recession to get this inflation behind us. More on inflation later. On top of that, we had Apple, which frankly reported a stellar quarter. I mean, near as I can tell, they hit or exceeded every metric. They are also announced another $90 billion in stock buybacks. Really not anything to nitpick in Apple's earnings. Although on the conference call, they did let it know that, yes, even the mighty Apple is starting to feel the impacts of supply chain, most specifically the various shutdowns in China. Apple's, I believe, CFO talked about the potential impact to revenue, right? The top line could come in somewhere between $4 and $8 billion. That is one hell of a hit. I suspect that might be taking some future quarter earnings down. Although when you look at the past quarter, Apple, stellar quarter. Good for them. Looks like it's true. Musk sold some shares. It was pretty obvious that something abnormal was happening Tuesday. The volume in Tesla was double normal. Looks like through yesterday, he has sold $8 billion, which is he has to raise cash to buy Twitter. Again, folks, this should not have been a surprise to anyone. Elon Musk is not typically cash rich. And as I understand it, he needs about $21 billion in cash to close the deal. So based on selling he had from the previous year, estimates are that he had about $3 billion in loose change. He's just sold 8, which, oh, by the way, he's got to pay $2 billion in taxes, right? Because this is profit. So the U.S. federal government can expect $2 billion donation from Elon next year. I'm not sure if Elon pays quarterly or not. He probably has to pay quarterly. So again, that's about 5% of his stake. Again, this is predictable, right? These are, when you start connecting dots, you can see what is likely to happen. Robinhood, another prediction come true. We talked about all of the folks that were essentially day trading last year. Now they're getting back to work. They don't have unemployment. They don't have these other things. They're getting to work. And that's less time to trade. Plus, the stock market is down, which anytime the stock market gets down or you buy the dip and you don't have any more money, trading goes down. So not only is Robinhood laying off 9% of staff, they missed on earnings, missed on revenue, disappointing guide. It's just that, unlike Apple, Robinhood's quarter could not have been any worse. It's like missed. I think they might be trading under $10 today. It's pretty crazy. I don't know if Robinhood has enough kind of brand equity that somebody eventually buys them. Otherwise, Robinhood could be like search engines. For those of you that don't remember the .com era, there was a time where there were, I don't know, a dozen search engines. I remember Ask Jeeves being the one that I always thought was pretty cool, or I don't know what you would call it, but I used Ask Jeeves before Google dominated the market. We might see some free stock trading apps, Webull, Robinhood, and the ilk. Some of them might go to zero, and Robinhood seems to be going down that pretty quickly. Other earnings, we got Intel. They beat, but again, gave horrible guidance or weak guidance, which I'm sure is going to hurt the stock. Roku beat on revenues, but had an earnings miss. So revenue is top line, earnings is bottom line, and gave weak guidance. Looks like Ark K and Cathie Wood is back at it. I don't know if you saw this, but Teladoc lost 48% of value in about a 48-hour period. Yes, folks, down almost 50%. That was Cathie Wood's second largest investment to Tesla. She had $1 billion in Teladoc before the drop. And she just went dumpster diving and bought 20 million more. So Cathie Wood is committed. Her bets are so concentrated that my call 11 months ago, again, was one of those things. It just had to happen. Concentrated bets work when you have great timing, and they don't work when timing goes against you. Former CEO and Citi Wealth says a recession is on the way and frankly inevitable. If you've watched my whiteboard discussion about 2022 and 2023, I agree. A soft landing is theoretical and nearly impossible with what we have going on. To that end, PCE, personal consumption expenditure, we've talked about it a bunch, not because it's important to you and I, but because it's important to the Fed. It's important to the Fed. It came in today, core 5.2%, which if you wanted a silver lining is slightly lower than February at 5.3. However, I hate core because it doesn't include food and energy. And as a consumer, food and energy is everything. I think the fact that the Fed has talked itself into using core over the headline number is disrespectful. It came in at 6.6%, fastest since 1982. Folks, a 50 basis point raise May 4th next week is a lock. In fact, 75 basis points needs to seriously be considered at this point, although I am not changing my opinion. 50 basis point is the answer. Although I am starting to think 75 basis might be the right answer for June. Not good because, again, inflation, stuff we buy is a problem without question, but when it exceeds wage inflation, that is horrific. And that is what we have going on. Employee pay up 4.5%. PCE, again, 6.6. That is ass backwards. There's not a single consumer, there's not a single American in the country that should be happy with that. That is not okay. Wages should be above inflation, and we are not there. We haven't been there for a while. This is not okay. This is not okay. The Fed needs to get off his ass and do something to help the American public. It is not good. Real disposable income. Folks, I brought you a lot of vocabulary in the last couple of months. One of the ones you have to remember is nominal and real. When you see a headline number, the first thing you should ask yourself, is that nominal or real? So let me once again define it. Nominal, it's just the actual number, right? It's, I don't know, 6.6%. Real is when you adjust it for inflation. Real numbers are more important because it allows you to compare time to time. Real wages, real disposable income. And if you've been watching my channel for the last week, you know I've gone on a couple of rants. It's not about income. It's not about net worth. It's about disposable income. More and more and more and more of you need to focus on disposable income. It's why you're financially stressed. It's why you're living paycheck to paycheck. We need to double, triple, quadruple disposable income. More importantly, real disposable income. And as of today, the number is going backwards. Our government has created incentives or programs or printed money, whatever you want to call it. Too much money chasing too few goods. It is always a monetary phenomenon, and we are all suffering, and the suffering has not stopped yet. Looks like 2/3 of large urban counties, think San Francisco, New York, LA, large urban counties saw their population decline. And the target cities, meaning the cities people are moving to, are growing. People are doing it because of jobs, bigger, cheaper cost of living. It's just a better way to go. If you don't have to live in San Francisco, why the hell would you? This, unfortunately, is part of the problem with real estate today. The people can decide to move in a heartbeat, but the cities you all are moving to weren't ready. Rents exploded, housing exploded. Sure, new building is going on, but it doesn't move that fast. So this is a trend that I hope doesn't reverse. Again, a lot of the large urban cities have adopted policies that are unfriendly to business. And if you're companies like Airbnb sent out a note yesterday that says all of its employees can work anywhere they want. I think more and more companies, at least in the tech area, will be doing that. And if that is the case, why the heck would you live in San Francisco? On top of that, Airbnb did go the extra step and say, we will not adjust pay based on where you decide to live. Folks, if you make San Francisco money and you can live in the Midwest, yeah, that's a good value exchange. I'm just saying. What else do we got? It looks like Chevron and Exxon, both obviously in the oil and gas industry, reported earnings. Chevron beat top and bottom, profit quadrupled. ExxonMobil, kind of a mixed quarter, missed top line, hit the bottom, actually missed top and bottom. Part of it is because ExxonMobil had to take a $3.4 billion write-off to exit Russia. There's been some pretty big write-offs to exit Russia. I expect more of those in Q2. Last thing to say, consumers can cause a recession all by ourselves. In fact, I would argue that recessions, most of the time, are caused by consumers. And near as I can tell, the consumer around the world, from China to Europe to the United States to every country around the world, is more concerned, more scared than they have been since the dot-com bust. The Great Recession certainly hurt the US, but I remember the dot-com bust being a worldwide phenomenon, and the world consumer was scared. Folks, we might be heading into worldwide stagflation, ultimately culminating in a worldwide recession. Recessions, again, they suck, they're bad, they're scary. But if you prepare and you're ready and you do the work, they are the greatest time to make life-changing wealth. buy discounted assets. Set your family up for decades to come. Do the work. Do the work. Lots of the stories in these two books, you can hear about people taking action during recessions and making different choices. So again, folks, it is Friday the 29th. We are heading into a weekend. If you are ready to start doing the work, you should go ahead and click on the amazing course, How to Get Started One Rental at a Time. Before we leave, I want to congratulate someone who did the work. Jeff, congratulations for doing the work. Your card will go in the mail today, folks. If you don't know what this is a card I give everyone who simply says, one rental at a time, help me some way, somehow. If that is you and you close the deal, send me a note. Hint, I need your address so I can mail you a card. I can count you. We're up to almost 690 cards have been sent out. So we're going to keep tracking this until the end of May. That will be one full year. So Jeff, congratulations. Thank you, everyone. You have a wonderful day. Who we got today? We got Stephen Dow from Velocity Mortgage at 8. We're going to talk to Matt the Lumberjack at 9. Ty for the weekly wrap up at 10. And then I think I have a mentor session at 10:30. I do offer a mentoring option with 30 minutes of my time for folks that want that. So check out all the links below. Have a great day. It is Friday. Do the work, do the work, do the work. Bye-bye.